Hi, welcome to the Market Alert for Friday the 5th of May 2017. So what have we got? Yesterday we had a sell signal appear on the chart. It was filled. The market went down to the actual scalp. And what I'm looking at here is crude oil, because there's a correlation between crude oil. Well, there used to be. Sometimes it works, sometimes it doesn't. It used to be incredibly consistent. If the demand for crude oil dropped, the stock market dropped, because obviously there was less demand in the economy. But things have changed slightly. They just use it as and when they want to now to manipulate a move, as we see with the Wednesday afternoon crude oil inventory figures which are released. They've seemed to have lost some of their impact over the last 3 or 4 months, where they used to be they were upgraded from medium impact to high impact because of the volatility that they created because of the drop of 70% in crude oil prices. So what I'm doing here is just having a look, seeing, okay, well, we've got crude oil on the slide here and moving slightly lower. So I come back and think, okay, remove the initial stop and move the stop to break even, just in case crude oil continues to move low and put some pressure on the market. And that's precisely what happens. We then get a second sell signal. No chance of moving the stop yet. The second one is filled. You can see there at the moment we're sitting on 45 points. Whoops, wrong one. Let me just get rid of that. Sitting on 45 points of profit. We've got Super Mario speaking at 4:30, I think it was, and then the market starts to find a bit of support. I'm having a look at the daily chart to see where we could be heading to should the market continue lower. It's a fair way off at this point, of course, when you're looking at the daily chart and the 5-minute chart. So then back to the intraday chart. So you can see there's some support coming back into the market. I know Drog is going to be speaking. They're going to do the damnedest to bring it back, because that's what they do, and then take a view to get out of the actual trade. You can see here I'm looking at whether the market's got the intention to move through here down to this psychological level here of 20,900. But notice what's happened here. The selling has disappeared. It started to drop off. So with that, as I said in my notes, come out, take the money off the table, and then wait and see what happens. And then the market just trades sideways, and then eventually starts to move lower once more before the plunge protection team do their stuff and bring the market back, as you see there. And what a surprise, which of course there's no surprise whatsoever. So the reason and rationale behind staying in the trade is because of the lows in the implied volatility. There's no doubts about that at the moment, and we're on the cusp of something major. Again, I have absolutely no doubts about that whatsoever. Can't give you the day or the date or the time, but we're certainly heading that way. There's no doubts about it. In the daily chart, whilst we're here, let me switch off when the recorded there. It's not going to work, is it? Let's go to the end of day. You also see on the overnight the market's moving lower. The market's weak. Make no bones about that. The market is weak, and they're doing whatever they can to levitate this market up. Again, if you look here, it's basic stuff, I know. But if you have a look, each rising low is not actually having the market close above it. It may trade above it, but it is not closing above it. This is a sign of weakness in its basic form. Again, you can see the market actually came down to the 20,888 and then bounced back. It's also bounced off this level on the overnight as well. So we've got the non-farm payroll figures out at 1:30, and the usual stuff: unemployment rate, average hourly earnings. And then we've got a whole host of Feds speaking today. We've got Fisher out at 4:30. We've got Evans out at 6:30, and then the top act, Yellen, at the Starry Net at 6:30, so that's going to be an interesting Friday with the non-farm payroll figures. See how the market reacts. No doubt they'll bring it back if they can, if it's bad news, and again we'll wait and see what happens there. Let's have a look at the implied volatility, and you've already probably spotted it. We're at 8.15. 8.15 happened in January. We're now back in the lows. They took advantage of the plunge protection team's generosity last night as the market moved higher and brought back the implied volatility down to the 8.15 level, which I have spoken of before, and now they've managed to achieve it. I thought they would have used a Macron victory to do this. Again, we've got that looming this weekend. It's going to be interesting. Who knows who's going to win at this stage, but it's certainly going to be interesting. The outcome is very simple. Macron in, market up. Marine Le Pen in, market down. Simple as that. That could be the trigger if she gets in, which doesn't seem likely at the moment, but if she does, then that will be the trigger point for the market to sell off big style next week. And if not, then it will go back up, do its levitation thing, and then wait for something else to trigger it. But it's definitely on the cards. There's no doubt about that whatsoever. Right, that's it for today. In fact, just before I close, let me just cancel this. I will include the link in the email I send out. This article here is absolutely fantastic. This is something that I uncovered way back in the 1990s, for those of you who've been following me for years, and this article puts it in a far better way than I could. It's about looking at the single domino and then the domino effect in the markets, and I would certainly urge anybody to actually have a read of this. I'll include the link, but if I forget, which hopefully I won't, then if you just type in volatility, a misleading measure of risk into Google and then look for zero hedge, it will do, but hopefully I won't forget to do that. Yeah, so the market's going to be waiting for the FOMC numbers at 1:30, and it could be a very interesting outcome from those as well. Right, that's it from me. I will see you in the next one. Have a great weekend, and as ever, thanks for watching. See you in the next one.